Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets as we close out another trading day on December 22nd, 2025. We've got a lot to cover, from a solid rally across major indexes to some exciting moves in individual stocks, plus a look ahead to what 2026 might hold for us long-term investors. So grab a coffee, settle in, and let's dive into the highlights. First up, the markets painted a pretty bullish picture today. The S&P 500 climbed a nice 0.64%, while the Nasdaq powered ahead with a 0.52% gain, fueled by a rebound in tech names. The Dow Jones wasn't far behind, up 0.47%, and the Russell 2000 stole the show with a 1.16% surge, showing small caps are getting some serious love. Volatility took a breather too, with the VIX dropping over 5%, signaling calmer waters for now. For us long-term players, this broad rally is a good sign of market health heading into the new year, though we've got to keep an eye on whether this momentum holds. Let's talk winners. Among the large caps, some familiar names led the charge. Oracle was a standout, jumping over 3% today, continuing its strong run with a massive yearly gain. Micron Technology also caught my eye, up 4% on the day, and boasting a jaw-dropping 200-plus return for the year. Talk about a powerhouse in the chip space. Merck and Citigroup also posted solid gains, showing strength in healthcare and financials. These moves remind us that quality large caps can still deliver, especially in sectors tied to innovation and economic recovery, which are key for our long-term portfolios. On the flip side, not everyone had a great day. Carvana took a hit, down nearly 4%, despite an impressive yearly performance. Infosys dropped over 5%, reflecting some broader weakness in tech services, and Seagate Technology also slipped more than 4%. These dips can sting in the short term, but for us long-term investors, they might signal buying opportunities if the fundamentals remain strong. It's all about zooming out and focusing on the bigger picture. Looking at the market movers, the usual suspects dominated trading activity. Nvidia and Tesla were buzzing as always, with both seeing modest gains today. Nvidia is still riding the AI wave with a solid yearly uptick, while Tesla continues to capture attention with its innovation in autonomous driving. Amazon and Palantir also saw heavy volume, reflecting ongoing investor interest in tech and data-driven growth stories. These names are core to many of our long-term strategies, so it's encouraging to see them active, even if day-to-day moves can be choppy. Speaking of volume, the most active stocks today included some of these heavy hitters like Nvidia and Tesla, but we also saw names like Clearwater Analytics surge on news of a massive take-private deal worth over $8 billion. That kind of action shows how M&A activity can shake things up in the short term, and for us, it's a reminder to stay alert for strategic moves that could reshape industries over the long haul. Now, let's zoom out to some bigger picture news shaping the market narrative. There's a lot of chatter about 2026 outlooks, with experts like Jim Cramer highlighting the potential for strong earnings growth, think double-digit EPS gains, and a wave of takeovers and acquisitions that could fuel bullish sentiment. On the flip side, there are concerns about an AI bubble, with some analysts pointing to a potential burst, starting with failed deals in the space. For us long-term investors, this duality means staying diversified. Don't put all your eggs in one tech basket, no matter how shiny it looks. Diving deeper into the S&P 500, the index is flirting with record territory, and some forecasts are calling for a push past 7,000 in 2026. But there are caution flags too. Valuations are stretched, and concentration risk in a few mega-cap names could spell trouble if sentiment shifts. As long-term players, we need to balance this optimism with discipline, maybe trimming overvalued positions while keeping exposure to growth. Over on the Nasdaq, tech continues to drive the bus, with AI optimism pushing the index higher today. But there's a whisper of caution here as well. Some worry that the AI hype might cool off if CapEx slows in 2026. For us, this is a cue to focus on companies with real earnings power, not just promises, as we build out our tech allocations for the decade ahead. Looking at the past week's top performers among large caps, Rocket Lab blasted off with a nearly 40% gain, riding the space stock wave. Micron again showed strength with a 17% weekly jump, and Carnival cruised higher by over 20%. These short-term sprints are exciting, but for our long-term game plan, they're a reminder to look for sustainable trends like space tech's growth potential rather than chasing every hot streak. On the weekly losers list, Nike stumbled hard, down 14% over concerns about demand and margins. Some Brazilian energy names also took a beating, dropping over 20%. These pullbacks can be tough, but they often create entry points for us long-term thinkers if the underlying story still holds water. Nike, for instance, has a brand moat that might weather this storm. Shifting gears to earnings, this week and last had some big names reporting. Carnival delivered a standout quarter with record profits, easing pricing fears in the cruise sector. Micron also reported recently, reinforcing its strength in the semiconductor space. Looking ahead, keep an eye on companies like FedEx and Nike from last week's results for any ripple effects. These reports give us critical insights into consumer and industrial trends that shape our long-term investment decisions.
You get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Wrapping up with a sector snapshot, basic materials led the pack over the past week with a 3.78% gain, followed by healthcare and industrials showing decent strength. These moves suggest some rotation into cyclical and defensive plays, which could be a smart hedge for us as we navigate potential volatility in 2026. On the weaker side, consumer defensive stocks lagged with a 0.83% drop over the week, alongside slight declines in consumer cyclical and real estate. Not a huge red flag, but it's a nudge to reassess exposure in these areas if they don't align with our long-term growth goals.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.